Welcome back, and joining me for a closer look at what's played out on the market scene today is Andrew Padoa from Sasfin Wealth. Thank you so much for your time, Andrew. The big thing locally is the budget. There was actually an article that said that the DA and ANC still have not reached agreement on the proposed budget. I don't know, because it's the last time the budget was postponed, it seems very long ago. So it surprises me that there still is not a proper agreement at this point, considering that the budget is on Wednesday. What are you looking at on that front?
Yeah, fair point, Sonati. Quite unprecedented in South Africa's history to see this happen. But, a 2% VAT hike is a big move. It affects everyone. It affects the rich, it affects the poor. It's kind of a blanket tax across the board. My worry is there's a thing called the Laffer curve in economics, and it basically says that there's a point where if you increase taxes too far, you actually don't bring in more revenue for your country. And businesses downscale, relocate, people spend less money, people are encouraged to avoid tax, kind of like what we saw in Greece in 2010. So I wish the discussion was more about how we can grow South Africa instead of how we can tax South Africans more. Yeah. But let's see what happens on Wednesday.
Indeed, and hopefully it will actually happen. The markets are largely red today, and of course we did get more news coming out that the steel and aluminium sector will have tariffs coming for them on Wednesday. Talk to me about just those details. If there are, any JSE counters that maybe need to be worried about this coming into effect on Wednesday?
So I know Hulaman mentioned something on the SENS a couple of weeks ago, just kind of flagging it. So I'm not sure what the consequences would be for a company like Hulaman, but they'd definitely be affected. But if I look at, I've got US markets on my left, I've got South African markets on my right, and it's just kind of red. If I look outside, it's raining, it's grey and gloomy, and it's kind of miserable, which is it's kind of how I feel about markets today.
Yeah, indeed. No, I completely get you. Yeah, it was quite interesting to see that statement from Hulaman. I think they largely said that it won't really affect them, but of course we will see how things go as we see the impact of that on the broader industry. Andrew, we also do have China's inflation that came out yesterday. And over there we saw it sinking into negative territory. Definitely not good. And I'm quite surprised considering the stimulus measures that they are implementing. Your thoughts?
Yeah, it doesn't seem like the stimulus measures are working if we're looking at the inflation data. I think, we want a little bit of inflation. You don't want too much, you don't want none. The challenge with deflation is, you and I, if we know things are going to be cheaper in 6 months' time, we're just not going to spend anything now. We're going to wait 6 months. And you need that consumption to try and get some economic growth. Consumption's a big component of GDP. So no, not great for China. So they need to go back to the drawing boards to figure out how to grow their economy.
Oh, indeed, it is a very sad state of affairs. And of course, coming out with that target of 5% for economic growth, we are crossing fingers for them. Let's come back home and take a look at some of the company news that came out of the JSE. Let's actually start off with Sun International that came out with a year-end trading statement. The hospitality company expects headline earnings per share to climb by as much as 20%. Stock did surge 5%. I'm not sure really where it ended off. But is this stock worth shopping for?
It's not on our radar.
Okay.
But if I look at that trading statement, they were very bullish on the growth on Sunbet, which is their online gambling division. Online gambling is massive at the moment, both in South Africa and internationally. It was a trading statement, so they didn't give too much away. We'll have to wait until the 17th of March for their full financial statement to come out.
And it did actually extend those gains, now up more than 6%. quite good buying activity that we saw there. Let's get into commodities on the opposite side of the spectrum. Merafe came out with its annual results, and we saw that stock nose diving almost 15%. It just kept on going down, down, down. Of course, that decline starting off with a 9% softening on the top line and an even bigger decrease on headline earnings per share. Just give us insight on the pain that Merafe is feeling.
Yeah, so revenue and earnings down substantially. So ferrochrome prices have impacted them. What they said is there's been surplus supply coming out of China with the new Chinese production capacity. So massive, supply, not great for prices. So even their outlook didn't seem very encouraging either. It was more about reviewing smelting operations, cost cutting. It was more like defensive and survival kind of mode, as opposed to, how do we grow the business? So yeah, tough times for Merafe, I'm afraid.
Also tough times for Impact, coming out with its own annual results today. We did see, though, top line growth of 4%, but that not filtering through to the bottom line. But the company is still declaring a dividend there. Was there no way to run for Impact?
Yeah, shame, man. They, again, another company that reported today that highlighted the challenges of operating in a weak economy. They also did flag some issues in their Wadeville plant. It looks like they lost a beverage contract. Well, it expired kind of in the middle of 2024, and that had a huge impact on the volumes in that plant. But yeah, shame. Another business that's having a tough time at the moment.
Well, I was quite surprised by the results that AVI came out with versus the reaction. Of course, they're also operating under the backdrop of a tough economy. So with their 6-month results, the top line barely grew, up 1.1%. But actually, we did see decent growth on the bottom line, that headline earnings per share jumping by almost 9%. But investors still selling off. The stock was down about 5%. Talk to me about this. Was it aligned with the results, or maybe there was a little bit of a mismatch there?
So I think, revenue is only up 1%, but earnings up 8%, which is fantastic. But at the end of the day, you really need top line growth for that bottom line to grow. So the reason why they had such great earnings per share growth compared to revenue was just phenomenal cost containment. But we can't do that forever. That's kind of a short-term move. They did see stable low-digit growth in the food division, but the decline for AVI was more on the discretionary side, specifically in the foot sales volumes. That looked to be quite a bit lower. Look, they managed to protect gross margins in a tough environment, so hats off to them. AVI are definitely one of the best management teams, in my opinion, on the JSE. But they even flagged it in their outlook that the constrained environment it'll make their jobs difficult to try and keep that margin where it is at the moment. So at the end of the day, you can't create growth in an environment where no growth exists. So we need to see top line growth.
All right. Well, Andrew, let us step into your stock pick for today. What are you choosing?
Sure. So my stock pick tonight is Amazon. So I think, we're seeing a lot of red screens at the moment, but we've got to see market pullbacks as an opportunity to upgrade the quality of your portfolio. So I'm taking a long-term view here, a 5-year view plus. Amazon screens very well on our side. On a price to cash flow basis, next 12 months, it's on 13 times. The only period that Amazon's been at that level in the last decade was at the end of 2022. So, I think Amazon's looking quite interesting at these levels.
All right. So thank you so much for your time and for your analysis there, Andrew. That was Andrew Padoa from Sasfin Wealth.